markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We check markets all day long here on Bloomberg. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The ERC is not alone. It's money that your medium-sized business may be eligible to receive for keeping employees on the payroll in 2021. Get an estimate of your company's potential refund today. Learn more at getrefunds.com. Now, let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It's an ugly day today as the banks are plunging. The Dow's currently down 500 points. S&P's dropped 66, and NASDAQ is lower by 214. The U.S. 10-year yield at 3.92%. Gold is up 15, energy trading in the red. And Bitcoin is plunging by 6.6%. All the main 11 S&P sectors all are trading in the red, and leaders to the upside on the Dow. Only Intel was in the green, while JP Morgan fell 6% and led to the downside. Regarding that bank sell-off, the catalyst was SVB Financial. That plunged as much as 60% after a share offering and a credit downgrade. Schwab fell 14%, First Republic 17%, and Signature Bank dropped by 12%. On a positive note, GE rose 6% on an upbeat outlook for aerospace margins. And wrapping things up, some of the names reporting after the bell tonight include DocuSign, Ulta Beauty, and Oracle. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, let's get to it. We've got about 17 minutes left in today's trading session, and we do have stocks bouncing off their lows of the session. Charlie just breaking down the trade. Some concerns over that weak jobs data today, and kind of a little bit of nervousness ahead of tomorrow's jobs report. So let's get to it with Megan Horniman. She's Chief Investment Officer at Verdance Capital Advisors. They're a private wealth advisory and multifamily office firm, and she joins us via Zoom from their headquarters in Hunt Valley, Maryland. Megan, good to have you here with Mike and myself. Another interesting day. Feels orderly, but it does feel like a different tone that we are seeing in the markets over the last week or so. How do you see it?
Well, I think this is a case of where, some of the bad news is actually turning into bad news for the market. Remember that sometimes the bad news would be investors would think that the Fed could hold off, but now we're seeing some bad news, and that's resulting in some skittishness, I think, in the overall market. And primarily it's from the banks. So we've had technology and growth be big leaders of the kind of decline in the market over the past year. But today, when you start to hear about banks and their pressure on the banks, that's when I think people start to get that reminder of maybe that 2008, 2009 type of scenario.
Yeah, Megan, it's easy to understand the pressure on a Silvergate or a SVB, the Silicon Valley Bank. Is it an overreaction, though, to sort of take those issues that those banks are dealing with and apply them to the big mega cap bank stocks?
Yes, I do think that this is just, again, it's any kind of news that we're starting to see crumbles where these sectors or banks or companies that benefited from very low interest rates, where it's now they're having to pay that price. It's going to have some impact, but I don't think this is the same situation as you're talking with the big banks. But it is just that ripple effect that feeds through the entire banking industry.
All right. So, how bad does it get? And I am curious, what you are hearing from your clients who are obviously, high net worth individuals. I'm sure they're investing for the long term. Maybe they're in the private markets versus public markets. Are they getting nervous? Are they saying, let's put it in something safe? I don't need to earn a lot. I just don't want to lose any.
There are some clients that are concerned, especially when you're looking at interest rates where they are. So people look at a 5% on a 2-year treasury and say, that's it, I'm out. I just want to buy, the short-term treasuries. You have to be very careful with that because we're not going to stay at a 5% forever. And you could have some opportunity lost, especially if you are looking for the long run. We do think that you could see possibly like a 10% correction from the recent peak that we saw in early February. That's because the market got way ahead of itself, expecting that the Fed was going to be able to stop sooner and possibly even cut rates this year. We never thought that was the case, so we thought the market was getting a little too ahead of itself then. We think the Fed's going to just continue to raise interest rates and then stay. The interest rates are going to stay higher for longer, and what we're seeing over the past few weeks is the market trying to reprice that in. We do think there's probably still some more downside for that large cap growth, those areas of the market that have benefited from really low interest rates. I mean, keep in mind, we've seen about 450 basis points in rate hikes in just 1 year time. And let's put that in perspective. 1 year ago, we were sitting at 0.25%. So what we're seeing now is, again, more of that, filter into where the Fed rate hikes are filtering into not only the economy, but also whether it's corporate earnings or the outlook for corporate earnings.
Yeah, Megan, it has been such an aggressive interest rate hike campaign. And, the thing you hear all the time is, well, there's a lagging effect. We might not feel the effects of this for some months later. But that one sector where you really start to feel it pretty quickly is housing. We've seen definitely softness in housing prices, softness in the construction hiring industry, as our guest before you had mentioned. What are you seeing in housing, and how bad can we expect it to get?
Yes, so definitely housing was the first shoe to drop, and you're seeing affordability still because interest rates now, 30-year interest rates are above 7%. Affordability is just very, very low. I don't think that the bottom in housing is really there yet. This is not 2007 to 2009. This is a completely different housing market than we're in right now, but I still do think that there is some more downside in the housing market. Prices, if you look at certain indicators, have been falling on a month-over-month basis for the past few months. I think you'll continue to see that until we get some equilibrium there as far as affordability coming back. And then remember, from a housing perspective, we still do have a structural issue with housing. So that's going to put a floor here on prices as well as activity in the housing market. The second shoe that we're starting to see to drop is some of those companies like today, some of these banks that really just took advantage of that very low interest rate environment. We're starting to see some of that come to, that those start to suffer right now. Speculative investments like the crypto world, we're seeing that suffer. The one area that we think still is not pricing in the magnitude of Fed rate hikes is the credit market. That is a concern for us this year is just corporate debt, high yield debt. When you look at spreads, while the absolute yield has risen, spreads have not reflected the big rise in interest rates, especially the refinancing schedule that you see over the next several years.
So this sounds like, as an investor, kind of rotation and figuring out how to survive the environment. Because, I was thinking about what we've been all focusing on banks and like, oh my God, what's going on? But I mean, if you take a look, I was looking at a Bloomberg story from last December. Wall Street's big banks scored $1 trillion of profit in a decade. So, Megan, is it smart as we look at what's going on that markets are cyclical, economies are cyclical. We are still adjusting coming off the pandemic and unprecedented stimulus. So maybe the world isn't coming undone, but it's definitely going to be a different market going forward.
Absolutely. I mean, we're still seeing, like you mentioned, we haven't started to really feel the effects of the Fed's aggressive cycle yet. Like we mentioned, housing, we're starting to see it in some of these small banks. I don't think this is a big bank story. The consumer is the other area that's starting to feel it. You're seeing consumers pull back from taking out credit. You're starting to see delinquencies on things like auto loans rise. It's just starting to make its way into the economy. And unfortunately, this is absolutely necessary in order to bring inflation down. So the Fed's job is starting to get done. It always has a lagged effect. That's why we figured that this year would be another very volatile and not great year from an economic growth standpoint.
Yeah, it just might. definitely going to cause some pain, and unfortunately more for some than others. All right, Megan Horniman, thank you so much. She is Chief Investment Officer at Verdance Capital Advisors, joining us via Zoom from Hunt Valley, Maryland. Just about 10 minutes left in today's trading session. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet-Fee. 3:53 now on Wall Street. Salesforce cutting hundreds of jobs, mainly in sales and marketing, as part of a plan to reduce its workforce by 10%. This, according to the Insider, citing sources that said layoffs are going to affect employees at offices, including in New York, Atlanta, and San Francisco. Salesforce shares, they are down now by 2%. General Motors is offering voluntary buyouts to salaried staff as part of a plan announced in January to cut $2 billion in annual costs. This in a regulatory filing. GM shares today down by 4.5%. Markets are undecided as to whether the Fed will be hiking by 25 or 50 basis points this month. That's as Bank of America predicts a recession in coming months. And we spoke with CEO Brian Moynihan about his research team's call earlier today. And here's what Moynihan had to say when he was interviewed in Paris earlier on today.
They basically have a recession predicted beginning in the third quarter this year, third, fourth, and first quarter. But it's a slight recession. It goes down 1% or 2% and then moves back up and then gets back to 1.5% growth in the latter part of next year, but still below trend growth.
Moynihan spoke with Bloomberg Radio from a Bank of America summit in Paris. JP Morgan Chase has been ordered to turn over more records from CEO Jamie Dimon in a lawsuit filed by the Virgin Islands accusing the bank of facilitating Jeffrey Epstein's sex trafficking. JP Morgan Chase down 5.3%. And those are some of the company stories we're following. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Thursday. Carol Masser along with Mike Regan. He's in for Tim, as you know, who is on leave. Just a moment, we're going to head over to our TV team, talk about the sell-off that we're seeing certainly in equity markets. Definitely a bit of a reset in terms of today's trade. We'll also be tracking some earnings out after the closing bell. In the meantime, we talked a lot, Mike, earlier about JP Morgan and a former executive, Jess Staley, and connections or possible connections with Jeffrey Epstein. And so a lot going on there. But another story within the big bank sector has to do with Goldman Sachs. And we're talking about Roger Ng. He was the only Goldman Sachs banker tried and convicted in the global 1MDB scandal. He was sentenced to 10 years in prison, definitely seen as a milestone in the prosecution of what was a massive fraud. Man, this story, Business Week just covered a bit about all the people connected with it. We know Leonardo DiCaprio. Right. There's a lot of stuff going on.
Right. It's really bad headline reputational risk piling up for the banks. And Goldman has already paid more than $2.9 billion to U.S. authorities and more than $5 billion globally for its role in the scam. So it's amazing how much damage this type of thing can do to a bank's bottom line.
Yeah.
You don't see that type of case very often. 10 years in prison, wow.
Yeah, he was convicted last April of conspiring to violate U.S. anti-bribery laws, conspiring to launder money. I mentioned Leonardo DiCaprio. I mean, there was the Malaysian financier Joe Low, and so there was a lot of connections tied to him and what he did, and apparently he bestowed a lot of money and gifts on folks like Leonardo and the Kardashians and other folks.
Right. And interesting defense from Ng, too. He said in a letter to the judge on Wednesday that a psychiatrist actually found he suffers from post-traumatic stress disorder after being detained for 6 months in a Malaysian prison. He described as, quote, absolute hell. He said he contracted malaria there and that experience was punishment enough, asking the judge to sentence him to time served. But it sounds like a long shot.
Yeah. Doesn't sound like it's going to happen. All right, folks, just a few minutes left in today's trading session. Carol Masser along with Mike Regan. We're going to head over to our TV colleagues. Stocks just off their lows, down more than almost 2% on the S&P, down 2% on the NASDAQ. And we're going to talk about the trade and some earnings. We're going to head over to our TV team. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Shanali Bassick. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Masser and Mike Regan. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. 38.19 and change right now on the S&P 500. Carol Masser, that's down 1.8% on the day, and more importantly, it is below that 200-day moving average.
A very key metric. Do we bump up against it? Do we continue to move even lower? When you look at the S&P 500, Mike, I mean, there's really no place to hide. You see most names in that index lower for the day.
And I hate to be that guy, Carol, but does anyone remember Bitcoin? Are we allowed to talk about that anymore?
We're allowed to talk about it.
But what a beta to the stock market today, down about 8.5%, biggest drop since November. So certainly just a risk-off feeling across the board. Bank stocks getting clobbered. It's one of those nasty days in the market.
Yeah, I mean, we talk about, obviously, the big drawdown that we're seeing today, not only in Silvergate, but, of course, in SVB and Signature Bank and everything that is even tangentially tied to that crypto space, even as Signature Bank points out. We don't do anything in this space, but nevertheless, I think there's this issue, not so much of contagion of crypto itself, but the contagion of confidence or lack of confidence.
Anytime there's signs of crumbling, right, within a bank sector, even though people think the big banks are fine, any signs just makes everybody a little bit nervous, Shanali.
But if the economy weakens, where do they make the money from, whether rates are higher or not?
All right, we are getting the closing bells here in New York. We've got a lot to walk through here. The Dow Jones Industrial Average down roughly about 550 points as we wait for these numbers to settle. Nevertheless, it is a down day, down about 1.7%. The S&P 500 at right around 3918, down 1.8%, and that is going to be a close below that 200-day moving average. The NASDAQ composite not spared either, down about 200 points or about 2% on the day, and it too is going to close below its 200-day moving average. Meanwhile, one of the big outperformers that we had seen over the past few days and weeks, now the big underperformer, the Russell 2000, lower on the day by more than 50 points or about 2.8%.
All right, big drop, as you said. We've been focusing on the bank stocks. That KBW Bank Index down just shy of 8%, Shanali, in today's trade.
Yeah, I want to talk about the sectors here too, because if you look at it in the S&P 500, you have the financials, the banks index down more than 6.5% on the day. Autos, diversified financials down 3% or more. Materials, consumer services, insurance, real estate, all tied to the rates, all tied to the economy, all down more than 2% on the day. Every major sector down on the day today. That is the sentiment there, but you do see those eco-heavy, rate-heavy sectors down more than anything else.
All right, so let's get to some of the...
Sorry,
please.
Carol, just on the broader market, I think this is an interesting story. The Russell 2000, actually, I just double-checked this, did actually close below its 200-day moving average. Remember, it was one of the first of the major indices to actually break above it here and held above it that entire time. So, an interesting milestone here, closing about 2 points below that 200-day.
All right, fingers crossed that these individual names are actually still higher for the day, and they are. General Electric I know you always watch. General Electric was up more than 9% at its highs today, still with a more than 5% gain here at the close. Company coming out, reaffirming its 2023 financial targets. Larry Culp, the CEO of the company, saying also it expects profit margins at its aviation division to continue to expand over the long term as an independent business. This stock is up more than 30% in the past 12 months. BJ's wholesale club holdings also up more than 2% off its highs, but still holding on to a gain. Out with earnings, analysts encouraged by its current year and long-term financial projections. So that is a plus. And then Intel, top of the NASDAQ 100 and S&P 500, it was up about 1.8%, despite having the most sell ratings in the NASDAQ 100. It's interesting. Analysts are negative. I don't have any real reason as a catalyst might, but nonetheless higher for the day here.
Yeah, well, there's one catalyst we can talk about that I think is spooking the entire bank sector. That's that SVB Financial Group, parent of Silicon Valley Bank, dropping 60%. That's its biggest drop ever. Now, you would think this is a bank exposed to crypto, but it's more a venture capital focused bank. And obviously, the VC space has had its own problems with crypto, so not completely separate. But SVB basically announcing they're going to sell some shares to try to shore up their position, and also that they've sold a big chunk of their securities portfolio at a loss, which is similar to what happened with Silvergate Bank. They're down 42% today to under $3. Look at the longer chart, down 99% from $222 in 2021. Obviously, this company announced today that they're going to wind down, and who knows what that means for equity investors. There's not a clear picture exactly what will be left for equities investors at the end of that process. And in sympathy with them, Signature Bank sank about 12%. They did come out and say, hey, as a reminder, we don't invest, we don't trade, we don't hold, we don't custody, we don't lend against crypto, but they do have some crypto customers as depositors. And the big story these days, Romaine, is banks are struggling to potentially keep those deposits in place when there's higher rates available elsewhere.
I still think it's interesting here, though. I mean, we talk about this idea of how the big drawdown that we saw in financials. And I just want to add a couple to your board. Charles Schwab was actually down the most since 2009, if I get this right here, down 13% here on the day. There's no news here. And there's a lot of other names here that are big names that have really got beaten up today in the financial space, similarly just because, I guess, of just the broader concerns here about maybe what the read-through is coming out of Silvergate. Obviously, a bank that has, or I say a financial company that really has nothing to do with it at all.
I really want to throw in an idea here, because part of this is that idea that things are floating across the sector.
Yeah.
But another idea here is maybe the tide is turning in the economic confidence after the jobless claims this morning.
Well, let me just get you to yields real quick before we move on here, because I thought that was actually an interesting tell too as well. We're down 18 basis points on the day for the 2-year yield. And that's pretty much the story across the board here. But then you get out to the longer end of the curve here, and we were down, well, 2 basis points on the 30-year, and about, 6 or 7 basis points on the 10-year here. I think that's pretty telling here when you consider the lopsidedness of what was being bought and sold in the Treasury market today.
Yeah, and remember, those futures did actually perk up and rise after the jobless claims, that whole bad news is good news thing as far as the labor market and the scenario for inflation. But, you can't discount that jobs report tomorrow. That average hourly earnings is expected to pick up, so maybe some nervousness ahead of that. And I would just throw J.P. Morgan in there, too. That news flow around J.P. Morgan with Epstein is not something banks wants to deal with.
We got some earnings crossing the wire. Carol, you want to go?
Sure. Let's start with Oracle, if that's okay. Third quarter adjusted operating margin, that's a beat, 42%, 41.2. But let's go to cloud. This is always important. We're talking about revenue of $8.92 billion. It's a smaller player versus AWS and Microsoft, but this is key in terms of what we're seeing. And then adjusted revenue. So we're talking about top line for the third quarter remained $12.4 billion, slightly light, but the estimate was $12.41. Investors right now sending that stock down about 2.6%.
I do want to go over to Ulta Beauty here. Those shares actually higher in after hours trading here. Their 4Q EPS was a beat at $6.68, and their net sales also appeared to be a beat at about $3.2 billion here. An interesting forecast going forward here. They're actually standing by some of their operating margin numbers, about 14.7 to 15%. That's a little bit higher than what the street was looking for, and their net sales forecast of about 10.9 to 11.05 billion, also higher than what the average street estimate is.
Yeah, I'm taking a look at Oracle a little more too, just because of that move after market. I mean, we were talking about it a little bit earlier here, that there was a lot of confidence behind the cloud spending, but things are looking a little weaker than expected on the top line overall. They still were able to sell more hardware than expected in terms of revenue, services revenue. I'm looking at a very slight beat here, but adjusted revenue fell in just shy of expectations overall.
Yeah, it's interesting, and they did also talk about a dividend, right? So they're raising their quarterly dividend 25% to 40 cents a share. That is certainly going to be typically something that investors like to hear, but we got to look for a little bit more analysis in terms of, cloud. They've been all in and trying to grow this and come up, against the behemoths, but right now investors, as you can see, Romaine and Mike, they're disappointed.
Yeah, if you circle back to Oracle, down about 5% in the post-market, so not a good omen for tomorrow's trade. Looking at the NASDAQ 100 futures, not a huge reaction, but they are still pointed lower, so setting up for a possibly ugly open for tech stocks.
Well, let's talk about that before we let you guys go here, because I was just looking at some more of the superlatives. Interesting that the KBW index on this day erased all of its gains for the year. Dow also in the red on a year-to-date basis. And I'm curious about the fragility heading into a jobs report tomorrow. A jobs report that, at least based on the last 10 ones we have, everyone pretty much got it wrong. So it's like whatever number you see on the Bloomberg screen as far as economist estimates, I mean, how much can you trust that as an investor right now?
It's pretty incredible, guys. The KBW Bank Index fall was the most since 2020. We're not in the middle of a global pandemic today.
Right, and to circle back to the jobs, remember, Romaine, that ADP number did beat pretty handily. It's not always a perfect one-to-one, but something to think about heading into that jobs report.
Yeah, definitely so. And of course, a lot of people are going to be looking at that wage data and then the big CPI report next week. I do want to get back to just some quick breaking news. DocuSign out with their earnings, but the headline appears to be the departure of its CFO, Cynthia Gaylor, the CFO of DocuSign, going to step down later this year. So she's not immediately leaving the company now, going to find a transition out of her here. And just real quickly, the numbers that they gave for the quarter and for the year appear to be a beat pretty much across the board.
Yeah, stock's up about 1.3% here in the after hours. All I'm going to to say is that jobs report tomorrow, 8:30 Wall Street time, could certainly change the tone of the trade. We seem to trade from data point to data point or some kind of earnings report. So we'll see what it has to say and whether or not this trade is a different one.
But you talk about 225, which is the estimate on non-farm payrolls.
Yeah.
But as a couple of our guests have pointed out on Bloomberg Television, they're looking at that average hourly earnings number, both on a month-to-month and a year-over-year basis. Month-to-month, you're not looking for any change. Year-over-year, you're looking for a reacceleration here. That's not what the Fed wants to say.
No, right? That's strength, and that means wage inflation continues at this point. I don't know. Let's see what the conversation is coming off of that report, because I think that's going to either confirm that the Fed has more to do, or maybe things are starting to get a little bit weaker. All right, we got to run. We need more time. We will see you. No. We will have more time.
There's plenty. There's plenty.
Oh, thanks. Okay, goodbye. All right, that'll do it for our cross-platform coverage. We call it Beyond the Bell, radio, TV, YouTube, and Bloomberg Originals. We will see you, maybe, if Romaine allows us, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, I'm watching shares of Oracle. Mike and I both are in the aftermarket, down about 5.6% following its latest earnings update. So let's get to it with someone who knows this company so well, keeps us smart on it, and that is our own Bloomberg Intelligence Senior Technology Analyst, Anurag Rana. He is joining us via Zoom in Chicago. I know the numbers just came out, but Anurag, we know you can pinpoint what we need to know. So why is the stock down?
Yeah, I think it's a matter of high expectations. But to be honest, I mean, I'm looking at most of the numbers. They're not that bad at all. If you look at their revenue growth is 21% in constant currency. I think the expectation was 21.5. So I guess 0.5% miss there. But the margins came in better, which is a very good thing because the margins for this company were hurt by Cerner acquisition. So from my side, I mean, actually, I don't think it's that bad of a deal given the current environment. Because if you look at both Amazon and Microsoft, when they reported, you know, they had a bigger miss in terms of their guidance.
Well, it's just such a risk-off day in the market that maybe, it's a sell first and ask questions later type of thing after earnings. But I remember in the previous quarter, the big issue with Oracle was they had a very strong backlog of orders, and that was, considered a pretty bullish thing for them. Have we learned anything more about that? Is there still that incredible order backlog that Oracle had?
So one of the things I'll tell you about backlog is, it is usually decided a lot by salespeople across the board for all software industry. So, but, conversion of that backlog into revenue sometimes takes time. Clients can decide that they're going to hold off on revenue. So we are looking for those comments on the conference call as well as guidance for next quarter because, from our side, I think we are looking at an enterprise tech slowdown. But as I said before many times, Oracle's not as badly affected with it as some of the other high growth names.
All right. So what's your number one question to the CEO? If you were sitting down with him.
The big question is going to be where are clients spending most amount of money? Clients can't really turn off tech spending, but where is the allocation of dollars right now? Are they upgrading their licenses of their databases? Are they investing more in CRM or in finance? Where is the money going right now?
All right, we're going to leave it on that note. Anurag, thank you so much. We wanted some quick analysis and smart analysis, and that's exactly what we got. That is, of course, our Bloomberg Intelligence Senior Tech Analyst, Anurag Rana. Thank you so much joining us via Zoom in Chicago. All right, we did also want to get a check on the auto sector. All of these conversations, all of these earnings reports help us to give us more clarity about the economic outlook. Right now we have with us, and back with us, the CEO of the online seller of the aftermarket auto parts company. We're talking about carparts.com. David Mignon joining us via Zoom from Torrance, California. David, nice to have you here with Mike Regan and myself. Welcome back. Your stock rallied yesterday following earnings, Tuesday night, fourth quarter revenue beat. Tell us about the quarter. Tell us about the outlook. Tell us about the environment, the business environment. Are you thinking recession or not?
Thanks for having me. Yeah, I'll tell you even more than the quarter. I'll tell you about the year. We've been in business for 25 years, and 2022 was a record year for us, both the top line and the bottom line. Our sales were up 14% to $661 million. Our adjusted EBITDA was up more than 50%. And today, as we sit, we're free cash flow positive, we're growing, and we're virtually debt-free. Now, as far as the second part of the question, in terms of the economy, what we're seeing is that inflation is everywhere, and the customer is still spending. However, what I'm feeling is that they're a lot more disciplined as to where they spend, how much they spend, and when they spend.
Yeah, so what does that signal to you, David? You know, I'm trying to wrap my head around where a company like yours fits into the economic climate. You know, on one hand, you would think, like any business, sales would slow down. But on the other hand, is it actually a little bit resilient to an economic slowdown because people maybe will repair their car rather than buying a new one?
Yeah, good point. And historically, we see that our business and our company is, you know, it's inflation and recession resilient. You know, we sell a need and not a want. Now, the last 3 years have been an economic boom in terms of spending because of all the artificial dollars flowing into the system. But what we're seeing today, and at least for us at carparts.com, is an opportunity to double down on the customer. Like I said, because the customer is still very disciplined as to where they spend, we have to focus on the value that we deliver to the customer. So for me, the last 3 years have been about availability and trying to figure out a way to connect the dot between the supply and the demand. But today, it's more about what value can we deliver to the customer and how can we be there for them in times of need.
You know, Carol, it's funny, as we talk to David, I'm reminded I have a busted taillight on my Toyota Highlander. I think we'll have to talk after.
Can't get a deal.
I know a place. I know a great
You know a guy?
place.
You got a guy
Same
for me?
quality, direct to consumer, factory to warehouse, warehouse to you, carparts.com, and I'll give you the VIP pricing.
No, you can't do that.
No, I can't. I can't accept that. But I do want to ask about those warehouses. You know, a lot of suppliers have struggled to match inventory with demand over you know, the last 3 years with the pandemic, the supply chain disruptions. How is the inventory situation with carparts.com? Are you back to sort of a normal supply and demand relationship? Are you oversupplied, undersupplied? You know, is it depend on what parts you're talking about? What's the sort of big picture there as far as inventories with car parts?
So you're absolutely right. The last couple of years have been around, you know, longer lead times and the need to carry additional inventory to fulfill the demand. And so if you look at our inventory position last year, we significantly flexed up in a lot of parts. Now today, to your point, we're in a much more normalized kind of inventory position. And, you know, as of the end of last year, we sat at, you know, about $138 million worth of inventory. And that's the right level for the current environment for us. So ultimately, what we do is we try to focus on carrying the right parts close to the customers so that we can deliver that value as quickly as possible.
So you guys are ahead of pre-pandemic levels at this point?
We are ahead of pre-pandemic levels because our business has grown. So pre-pandemic, actually pre-2019, our business was sitting at around less than $300 million in sales. And like I said, 2022 was $660 million. So we're a different company. We've opened a lot of buildings. You know, the last year was very exciting for us. We delivered record results. And so we're in a good spot today.
So not pulling back in any way in terms of spending, expansion, none of it?
So what we're doing is trying to be a little more intentional as to where we spend the money. And so there's a couple of areas where we're kind of taking away some of the spend in terms of that discretionary spend and reinvesting those dollars into customer-centric initiatives.
So is intentional the same as being cautious a little bit?
It's cautious, it's aggressive mindset, but it's a defense playbook.
David, what keeps you up at night?
You know, I think what keeps me up at night today is how do we become the #1 destination for our customer? You know, the way I think about our industry is there's $300 billion of parts being sold in the United States, and only 4% of that or 5% of that are online. How do we make it 10%? How do we make it 15%? Like apparel, like electronics. We want to be the #1. What keeps me up at night is trying to become #1.
All right, going to leave it there. David, thanks so much. Appreciate the time. David Mignon, CEO at carparts.com via Zoom in California. Hey, watching shares of Gap. They are down almost 6% in the aftermarket. Just came out with their latest quarterly update. Here's one of the big headlines. Fourth quarter total comp sales down 5%. The estimate was for a decline of 2.7%. Some disappointment there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check markets all day long at Bloomberg. Moments ago, we heard from Oracle, and Oracle reported quarterly sales that fell short of analyst estimates on a slowdown in information technology demand that has hit many other technology peers. Anurag Rana is a senior analyst with Bloomberg Intelligence, and moments ago, he was going through the report, and here's what he had to say right here on Bloomberg Business Week.
To be honest, I mean, I'm looking at most of the numbers. They're not that bad at all. If you look at their revenue growth is 21% in constant currency. I think the expectation was 21.5, so I guess 0.5% miss there. But the margins came in better, which is a very good thing because the margins for this company were hurt by Cerner acquisition. So from my side, I mean, actually, I don't think it's that bad of a deal given the current environment.
And again, though, after ours, shares of Oracle, they are lower now by 4.8%. Also reporting moments ago, we heard from Gap. They're based in San Francisco. It reported net sales for the fourth quarter that missed the average analyst estimate. After ours, looking at Gap stock, that is down now by about 4.7%. Worst day in 2 weeks for the U.S. stock market. Another down day with the S&P falling 73 points, down by about 1.85%. A rout in bank shares picked up steam today on concerns pockets of trouble in the sector could portend broader dangers. Bank stocks down today, including J.P. Morgan Chase down 5.4%, Citigroup down 4.1%, Bank of America down 6.2%, Wells Fargo also down 6.2%. Bottom line here, steep losses. The Dow down 543, down 1.7%. NASDAQ down 237, a drop there of 2%. Ahead of the jobs report tomorrow morning, 8:30 a.m. Wall Street time. Yes, complete coverage right here on Bloomberg. 10-year yield 3.90%, the 2-year 4.87%. Spot gold up 1%, 18.31 the ounce. West Texas Intermediate crude down 1.4%, WTI 75.58 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds that 70 to 80% of small businesses are good candidates for taking the employee retention credit. Don't bother trying to navigate hundreds of pages of tax code to learn if your business qualifies for ERC assistance. Let the tax professionals at Innovation Refunds do the work and help you secure the future you want for your business. Learn more at getrefunds.com. Well, our next guest had, as we said earlier, a front row seat to 5 decades of technological and social change, spent 8 years as CEO of one of the iconic tech firms of the past century. We're talking about IBM. And yet, as she says in her new book, she's not writing about technology or IBM, but rather about how we can all drive meaningful change in positive ways for all. She calls this good power. We are so delighted to have with us the former chairman and CEO of IBM, Ginny Rometty. Her new book is Good Power, Leading Positive Change in Our Lives, Work, and World. She's here in our Bloomberg Interactive Broker Studio. Pins and needles, so delighted to have you here. Congratulations.
Thank you very much. It was a big milestone, 2 years in the making.
Right, it's always...
Oh, yes, I never expected how hard it would be.
That's what everybody says. I have to say, and I think Mike and I would both agree, that when we started reading this, it didn't start like I expected it to. And I'm sure everybody who talks to you starts there, but it is a very personal story, a very real and revealing story. Talk to us about your family and your dad leaving.
Yes, it's one of the many moments I speak of, but because I think we're all shaped, like how we lead today has a lot to do with what we experienced in the past. And I was 16 when my father decided one day that he abandoned my mom and our whole family. He didn't realize I walked into the garage and heard him. And I heard him say to her, I don't care about you. I don't care about any of you. You can go work on the street for all I care. And
how do you process that as a 16-year-old?
Well,
and you had younger siblings.
I had younger siblings, yes. I stood there, and I think I reacted because I watched my mom, and she didn't cry. She turned around, she walked out. In fact, I never saw her cry. And here she was, though, as I think now, 34 years old, 4 kids, never worked a day in her life, hadn't gone to college, just barely through high school. And but she was so determined. So the reason I start there, and the only reason I wrote a book was...
Did you know you were going to start there?
No, okay. Absolutely did not know that. In fact, my collaborator helped me to start there because it's a very vulnerable moment to start. But the reason is to celebrate what she did and how she reacted, because it's like I saw my grandmother and great-grandmother both had big tragedies in their life. And I saw that, like, she had power to change something when she had nothing else. And that's kind of the premise of the book, that we all have more than we think. And she was like, I'm not going to be a divorcee. I'm not going to be someone on food stamps. I'm not going to let it end this way. And she got a little bit of education, a better job, a little bit better. And she never did get a degree, but it's the other thing, well, two things I learned. She taught us, never let anyone define who you are. Only you are. He was never going to define her as those things. And
it's so easy to go in the other direction.
It is very easy to be defined as a victim and feel a victim. And the second thing was that, you know, someone's access to education and their aptitude are not equal, meaning my mom really wasn't dumb. She just never had access to anything. And that would be a silver thread through my whole life that I would find to be true about, you know, how people can get skills. And to me, why I work today on this, what I think is so unfair in this country, and it's very solvable. How many jobs have been over-credentialed to require a college degree when they don't need one? And so many people in this country don't have one.
Especially when you think in a tight labor market, maybe things could be different.
I'm hoping, yeah.
Absolutely. Well, Jeannie, one of the more touching things in the book to me was, and you mentioned, you know, your mom was embarrassed that on occasion she would have to use food stamps and would actually drive to the next town over so no one saw her. Really kind of heart-wrenching moment in the book. But I wonder, you know, having seen the economy from both sides now, what do you think about the social safety net in the U.S. right now? Could it be done better? Is there a different way, better way to do it?
I am a believer in it, right? That it's needed. And it's needed for what I saw with my mom. It's to transition people. It's not a permanent thing. And that's, to me, what can be done better, is the transition part, to transition you to a better place. That's what it did for us. It transitioned us to a better place. She had to do it till she didn't have to do it. And I really feel accompanying it has to be all these things about getting people the skill so they can get a decent job. And that was really, you know, what my mom fell into, but it's such a, I think, a very practical, I find it, I've had a decade of working on this topic, that with some skill, doesn't have to be a degree, we can give people lots of new jobs right now. So safety net until you get there.
All right, so talk to us about getting to IBM in 1981.
Yes.
My dad was an engineer too. You were
an engineer.
An engineer. Open arms. Easy for a woman?
Yeah, you know, okay, so this is, I'm sorry to have to say.
And I didn't mean as critical, I just meant the environment.
I'm going to answer that two ways, because tech is not known for, obviously, for its diversity, so I would often be the only woman. But my first three managers at IBM were women. And so I have to just credit, it is a company of meritocracy and inclusion that goes way back before me.
Yeah.
So I was really lucky to grow up in a place like that, that for the most part, although for the times, right, I mean, it's all relative, but the only thing I remember when I went, I mean, I'd never worn a suit before. I came home from my interview, as I wrote, took my jacket off, and my husband's like, "What's on your arm?" I'm like, "Well, it's my first suit, and that is the price tag, stitched in still." I'm like, how gracious they never mentioned it, you know? Yeah, absolutely.
Well, go ahead, Mike.
Oh, no, Judy, I was going to say, you know, so much has changed in the tech world in the last few years with the trade war and everything. And I'm thinking back to, oh boy, it must be 20 years ago when Lenovo bought the PC business for IBM. Yeah. I can't help but think that that deal would ever go down today in this climate. So how do you see all of that going, this whole tension over tech between the U.S. and China?
Yeah, and if I've been to China once, I've been there 50 times and over my life. And to me, this boils down, I've always said in the past when people talk about it is co-opetition and competition. I mean, I've really believed that the safest world is an interdependent world. That is the safest world. And that right now, I've also felt the only reason I was ever in China was if I could do something better than the Chinese could do it. So in other words, your only route is to out-innovate. And so when we think about what to do now, I am really happy to see the U.S. finally really take under a serious, you know, you would call it a technology agenda for the country, right? It's been a long time since we've really had one. And I go back in time, you said, yeah, unfortunately, I've been around it 5 decades, when some of our greatest technology innovations all started in the government and then were commercialized by private sector. That was the way it was done. So now we finally have a national technology agenda. And yep, okay, fine, let them go off. Now we gotta, of course, protect our intellectual property and do it better. And I mean, that is to me what the focus has to be. And of course, some of the most sophisticated, of course, you know, those not aligned, you don't want to have fall into the wrong hands. And so that's how it'll be. But I'd love to see it more around both competition and cooperation.
But do you see, Jenny, that there's a clear division between the U.S. and its technology prowess and China doing it? Like it's not the globalization that we've been living for so long?
Yeah, it is. Do I see a difference between the two types?
Well, I just meaning that there's going to be not the cooperation.
Yeah, not as much cooperation, but there are things we can cooperate on, like the environment, okay, and technologies around the environment.
Right.
Think about that. And then on the other side, no, we've got to have our own race and really be the best in the world. So much of the U.S. prosperity has been driven by America being the leader in technology, right? By far across any other country. And that's what we have to continue. And so, like I said, that's why I'm glad to see it. And then, so we will continue our out innovating.
Part of that, and we've got about a minute, and then we're going to come back and talk some more, or 30 seconds, 40 seconds. Immigration needs to be part of that.
Yes, I agree with that. I've always said that, skills have no passport. And this idea that ideas flow without a passport too. And I really believe an essential part of America actually is that ability to bring in skills and be a destination for people who want to innovate in a country that has rule of law, protects IP. I mean, that is what brought people here. There are other countries in the world that you see when they have focused on that, they've blossomed. When they close, they don't. So that is a concern.
All right, sit tight. We're going to come back, and we're going to continue with Ginny Rometty. We could do an hour or two. We're not
No, I'd bore your listeners.
No. Former chairman and CEO, of course, of IBM. Her book is Good Power, Leading Positive Change in Our Lives, Work, and World. And we want to get to that because I want to ask her about good power versus bad power because we definitely see it play out, I feel like, in the headlines every day. Carol Massar, along with Mike Regan, you are listening and watching Bloomberg Business Week right here on Bloomberg Radio. Let's get a check on world and national news. Off to D.C., our 99.1 newsroom, and Nancy Lyons. Hey, Nance.
Hey, Carol. Well, President Biden is out with his $6.9 trillion budget proposal. He talked about it this afternoon in Philadelphia and reflected on his dad's belief that the way you measure what someone values is by looking at their budget.
Folks, let me tell you what I value with the budget I'm releasing today. I value everyone having an even shot, not just labor, but small business owners, farmers, and so many other people who hold the country together who've been basically invisible for a long time.
Biden's budget would increase funding on some government programs, would extend the solvency of Medicare, lower prescription drug prices, and cut the deficit by $3 trillion over the next decade. To pay for all that, he's recommending tax increases on billionaires and calling for the doubling of the capital gains rate for those making at least $1 million. House Speaker Kevin McCarthy says he does not support raising taxes on the rich. One of the lawyers behind former President Trump's efforts to overturn the 2020 election is now facing a legal reprimand. Bloomberg's Nathan Hager has more from Washington.
Jenna Ellis has been formally censured by the Supreme Court in her home state of Colorado for spreading falsehoods about the 2020 election. The court says Ellis admitted making 10 misrepresentations on television and on social media, including claims that the election was stolen and that the former president won in a landslide. Ellis once called herself part of an elite strike force, along with fellow Trump lawyers Sidney Powell and Rudy Giuliani. The Supreme Court decided not to disbar Ellis because she didn't commit any crimes. In Washington, I'm Nathan Hager, Bloomberg Radio.
Letters from some famous names will be in a new book from former President Trump. It's called Letters to Trump and includes notes from late historical figures like Princess Diana and President Nixon. The price tag, $99. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We check markets all day long here on Bloomberg. The Dow, the S&P, NASDAQ all lower, but earnings after the bell. And we begin with Oracle. It reported quarterly sales that fell short of estimates on a slowdown in information technology demand that has hit many other tech peers. Shares right now, after hours, down by about 3.8% on Oracle. Also reporting moments ago, we heard from Gap. It's out with quarterly sales that missed estimates, an indication that the company struggled to attract shoppers during the holiday season despite deep discounts. S&P down 73 today, a drop of 1.9%. Stocks had their worst day in 2 weeks after a rout in bank shares picked up steam on concerns pockets of trouble in the sector could mean broader dangers. The Dow today down 543, down 1.7%. JP Morgan down 5.4%. NASDAQ down 237, a drop there of 2%. 10-year yield 3.90% with a 2-year yielding 4.86%. Spot gold up 1%, $18.30 the ounce. West Texas Intermediate crude down 1.5%. So what is going on with markets? Megan Horniman is Chief Investment Officer at Verdance Capital Advisors, and she was our guest right here on Bloomberg Business Week.
Well, I think this is a case of where, some of the bad news is actually turning into bad news for the market. Remember that sometimes the bad news would be investors would think that the Fed could hold off, but now we're seeing some bad news, and that's resulting in some skittishness, I think, in the overall market, and primarily it's from the banks.
And of course, we'll get more insight on jobs and what that potentially means for the Fed tomorrow morning, 8:30 a.m. Wall Street time. Complete coverage. Yes, we got you covered big time right here on Bloomberg Radio. Again, recapping, stocks lower. S&P today down 1.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, much appreciated, Charlie. Thank you. Carol Massar, Mike Regan in our Bloomberg Interactive Brokers studio. Still with us is Ginny Rometty, of course, former chairman and CEO of IBM. Her new book out, Good Power, Leading Positive Change in Our Lives, Work, and World. Good power versus bad power.
Yeah, great question.
What's the difference?
To me, the difference is good power does three different things. First, it's about how to do hard things in a good way. Right now, that would mean go toward attention. Don't polarize yourself. So in other words, I really believe, embrace tension. That's a good thing. Do it respectfully, and then just celebrate progress, not perfection. And so much of what it's my way or your way. Okay, I'm we're never going to get anywhere if that's the two views we're going to take. Right. And so if you do those three things, really practice them, in especially tension. I learned to love conflict and tension because I always knew something better was going to come out the other end if I would really go into it and listen. And it wasn't.
But you know what tension is today, right?
I love it.
I know, but you know what I mean, the divides and
I agree.
Conflicting view. It's gotten so ugly,
so polarized. So I feel like it's its moment that no, with all this division, there is another way to go about this that brings people together and it doesn't divide them. And so that's kind of what the book is meant to be. All these little tips about that I learned from watching lots of great people over the years on how they did that. And that, you ask young people today, hey, do you want to be powerful? They're like, no, I want to solve important problems. And I'm like, irony is you're going to need power to do that. And so it's how you exercise it. So I actually end the book with a handwritten note that it says, your greatest legacy may be how you do your work, not what you did.
Ginny, when I think back on your tenure at IBM, what an amazing transition that company made during your time, really moving from a hardware primarily business to services, cloud, everything else. And you retired in 2020, but I look at the stock price of IBM, and after an awful stock market last year, IBM pretty much reached a record high towards the end of 2020. So I feel like there's got to be some things you'd want to brag about from that era, because it wasn't easy. I'm sure you had some fights there to make these changes. What do you think the most important changes are? What's the sort of top line on your resume from your tenure there that allowed IBM to become the company it is?
Yeah. I mean, what I did was give it a foundation for growth, I believe. In me, lots of IBMers worked hard. And I think the striking point is it's not just what I did. We had to change how we worked. And so, yes, we had to move into all these new areas. That's what everyone talks about, hybrid cloud. We had to move, faster into AI, et cetera. But changing how so that you could work faster, that you could consumerize stuff. Because it's so unfair to say to a workforce, hey, run a marathon, but do it in hiking boots. I mean, and so I think the biggest thing would be around changing how work was done and all of our work around diversity and inclusion. We had records on all of those.
You said the magic word there, Ginny, AI. That's all
yes, I was waiting
wants
for
to
you.
talk about right now. So how do you see this all playing out? ChatGPT, Google's efforts, IBM, where's it all going?
Well, look, I am a big believer in AI, but I have always believed it would make man better, humanity.
Yeah.
And that you got to think of it that way. I've been at this for way decades now. And I think finally it's reached where it's in everyone's conscious, right? That's what ChatGPT did. It made it come to the forefront. Because AI has come in and out of interest over many decades.
Around, right?
Yes. Winter, they call it. AI winters, many of them.
Yeah.
So now it's in front of everyone. To me, it has finally teed up the most important issue with technology, which is that if we don't build trust into this technology, it is going to have a very bad ending, and it's a shame.
How do we do that? Does it require regulators? How do
we? I have a very strong view. Trust comes when you manage the up and the down sides of something at the same time. So that means, all right, I introduced chat. All right, do people understand it? Is it explainable? We got to get that done quickly. Do they know how it's trained? Garbage in, garbage out, all right? And it's very true.
It makes sense.
And then depending on the kind of problem I really tell people to use it for, they have a very different tolerance level, I learned, on technology. If it's search and you get a wrong movie back, you don't care. If it's about your health, you care you got a bad answer. Even though your human doctor could be wrong some percentage of depending on the doctor, of time. So this idea of trust means take responsibility for it. So
the onus is on companies?
It's going to be on companies, the users, and the builders have even greater responsibility. I always felt that. And so that you are telling people, A, how to use it, B, what it's trained with, or C, let's say I train it, and it's my proprietary data. I don't want that trained thing going to the next guy. So we got to work on all this at once. Do you need regulation? Here's my big point on regulation. Precision regulation. Do you like that you can open your phone with your face? That makes it pretty fast, isn't it? You got gloves on, you don't want to do. Okay, but you don't like facial recognition for things like racial profiling. So we should regulate the uses of it, not the technology itself, because we try doing that. People who make laws don't really understand the details of it. This is going to go nowhere, but they do understand the uses. And so that would be how I would do the regulation, because you want it to flourish. I have tried to hold technology trends back in the past. You can't stop them.
Do you think this is kind of the biggest thing that's going to be just change
I think it's
our
a
world?
really big turning point, and I actually think it's got the propensity to make you and me do our jobs better. And so I think it's going to bring and can uplift a lot of people into better jobs. At the same time, we got to mitigate the downsides. And that's active, just like social media, right? Yes, great, until then there were some bad things. You'd like to have pulled back the clock and said, let's work on the bad at the same time.
Well, but does that make you a little nervous, though, that social media has had its problems and
I
it's
just think
still
we need
working?
to learn from all of this,
but
right?
have we learned yet? We're not.
Well, I think that now when you talk about all the companies involved and, you talk about banks using it, telcos, these are mature companies. They recognize that the one attribute they have the world cares about is trust. And so I think when you think that way, you're going to think twice about how you introduce it to the world. So I'm hopeful about that.
Well, there's that risk of backlash, too. I'm thinking back to...
Yeah, if people don't understand something, fear and revolt, right?
Well, remember when IBM's Big Blue started beating the chess masters, that chess...
I learned very much trying to introduce technology, introduce AI to doctors. I learned the biggest thing was this was not a technology issue. The doctors had to make the time to change how they worked. They're very busy, day in and day out. They didn't necessarily trust what data trained it. I mean, we're seeing this play out one more time.
I keep looking at my list because I have a million more questions and we've run out of time. 30, 40 seconds. I have to ask you because you see so much. You're on corporate boards, JP Morgan, Cargill, and others, Northwestern.
You're not really
University.
retired, are you, Jen?
I'm failing.
You're not good at being retired.
No.
30 seconds. How would you describe kind of this environment right now?
In many ways, it's a perma-crisis I've heard used as a word, right? There's so many at one time. And so I think we'll be living with that uncertainty for a very long time. End on an up note. I think these are the moments when you can, back to how I started this, companies and people can define who they are. in people's minds. And so I think right now, I'd put a premium on trust if I was a company, on everything I did for my customers, my partners, et cetera, because this is going to be with us for a long time.
Now, when's the last time you ate tripe? That's what I want to know.
You know, in spaghetti sauce, it tastes pretty good, very tender, I have to say. But I have to say it was a couple decades ago.
You have to read her book to find out why. Ginny Rometty, thank you so much. Good Power is the book. Check it out, everybody. This is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 4:53 now on Wall Street. Oracle reported quarterly sales in line with analyst estimates after its cloud business failed to meet expectations for higher growth. The stock is now slumping, with Oracle lower now by 4.5%. SVB Financial Group shares plunged the most in more than 2 decades after the parent company of Silicon Valley Bank took steps to bolster its financial position that includes a stock offering. Shares of SVB down now by 60%. The Fed is assembling a new team to help ensure that the central bank can stay on top of developments. It comes as the Silvergate Capital Organization planned to wind down operations and liquidate its bank after the crypto industry's meltdown sapped the company's financial strength. Shares plunged 42% today. General Electric expects profit margins at its aviation division to continue to expand. And with more, here's Bloomberg's Steve Rappaport.
Charlie, Chief Executive Officer Larry Culp says GE Aerospace, which primarily makes and services jet engines, should also see revenue growth at a mid to high single-digit rate and generate free cash flow in line with net income over the same period. GE says it expects sales at its combined power equipment and renewable energy units to grow at a mid-single-digit rate with high single-digit profit margins, despite intense near-term pressures at GE's wind turbine business. The company also reaffirmed its 2023 financial targets, which call for a more than doubling of adjusted earnings and up to $4 billion in free cash flow. Charlie?
And GE shares up 5.3%. Those are the company stories at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master along with Mike Regan. Right now, let's get a check on world and national news. Off to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. The chief executive of Norfolk Southern Railroad, Alan Shaw, faced some tough questions today from members of the Senate Environment Committee, and he reassured them the company will help the residents of East Palestine, Ohio, rebuild their lives. Bloomberg's Irv Chapman has more from Washington.
Chairman Tom Carper asked Shaw if his company would cover the costs of medical treatment that might be needed by victims of the chemical spill long term.
Senator, I'm committed to doing what's right. We're going to be there a year from now, 5 years from now, 10 years from now. I've been there in person. I've looked into their eyes. I've heard their concerns. I'm committed to that community, and so is Norfolk Southern.
Shaw said the company has already committed $21 million to meet the needs of the stricken community. In Washington, Irv Chapman, Bloomberg Radio.
It's been an especially brutal day for Ukrainians, with dozens of missiles being fired on cities as far west as Lviv. Russian forces appear to be ramping up its ground campaign, and National Security spokesman John Kirby tells Good Morning America the fighting is expected to intensify in the next few months.
We know that the Russians are planning to conduct more offensive operations here when the weather gets better. We're trying to use this time to make sure that the Ukrainians are ready for those assaults and actually are ready to conduct offensive operations of their own.
Kirby says today as many as 80 missiles were fired on infrastructure targets. An effort to better track gun purchases is on hold at Visa and MasterCard. A person close to internal deliberations says the pause was detailed in a series of client communications this week. The plan was to add a merchant code for processing gun transactions. But both Visa and MasterCard warned that the code would not offer the level of detail needed to show what customers were actually buying. Opponents had called it an intrusion on constitutional rights and privacy. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Mike.
All right, Nance, thank you so much. You are listening and watching Bloomberg Business Week. It is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. It is time to take advantage of the newly extended employee retention credit. Innovation Refunds has helped small and medium-sized businesses impacted by COVID-19 claim over $3 billion in refunds, and they are standing by to help your business get back the money it may be eligible to receive. To learn more, just head to getrefunds.com. All right, well, March, as you know, is Women's History Month. Every day this month, we're celebrating significant moments in women's history. For your installment for this Thursday, March 9th, here is Bloomberg's Lisa Mateo.
On this day in women's history in 1959, Ruth Handler, co-founder of Mattel, unveils Barbie at the